We know that when an income is generated in the form of business or from profession, it shall be taxed under the head income from business or profession. So here, let us understand the income which is to be taxed under the head income from business. When any income is generated from a business, then it shall be taxed under the head income from business. So, how do we ascertain this income which is being generated from a business is what we shall be seeing in this video. Okay, so we all know that income minus your expenditure shall give you your profits, right? We know this. So what is loss? When your expenses are greater than your income, then expenses greater than your income, it will lead to loss. Clear? We know this. Correct. So when do we ascertain profits and when we ascertain loss? So this is what we shall see in a profit and loss account as well, right? So this is just a sample profit and loss account just to understand how a profit and loss account works. We record all kinds of incomes on the credit side of the profit and loss account. Correct. Then we record all the various expenses of a person or a business, whatever it is, on the debit side of the profit and loss account. So when we do this, we can ascertain whether we have a profit or loss by tallying it. Tallying it means what? We either total all the incomes or we total all the expenses, and when we see the difference between these two, we can know the profit or loss. So for example, in this we have the total of income is greater, so that will be taken on both the sides and we balance it to arrive at a net profit. Okay, just a sample, just forgettable figures, just remember that it's a net profit. Clear? So now we are calculating for income from business. Correct? So to know this, all the incomes from business, we have to consider only those incomes which are related to our business and those incomes which are related to our expenditure. In a profit and loss account, we have various kinds of incomes and expenditure that a person earns. But for us, we need to just know what is that income which is relating to his business, right? So what we do is we take the profit available with him. Sometimes there will be loss also. There's different adjustment for that. Then we'll see an example for a loss for a profit here. So we take this profit. So first we start by recording the profit. So net profit as per the profit and loss account. What is the net profit available in this profit and loss account? That is what we record. To this we add various inadmissible expenses. What are inadmissible? Inadmissible is nothing but these are disallowed expenses or non-business expenses which are not allowed to be claimed as a business expense under Income Tax Act. That is what we need to remember. If such an expense has been debited to profit and loss account, then it has to be added back to our profit. So basically, to arrive at the profit, we would have minused all the income, minus all the expenditure, correct? So when we do this, we would have arrived at a profit. When such an expense shouldn't have been added, shouldn't have been subtracted, but we have done it, what we have to do to make the adjustment is we have to add it back, right? So that is what we are doing here. We take the inadmissible expenses and add it back. Clear? There are various inadmissible expenses. Example is interest on the capital. Okay, or excess depreciation. There are various. You need to remember the list. If you want a better understanding of this chapter, you need to remember the list. Okay, it is inadmissible expenses which has to be added. Next, we subtract those admissible expenses which are not debited in the profit and loss account. Sometimes what happens is there would have been certain business expenses which are allowed under the Income Tax Act which are not being subtracted from the profit. Okay, so such an expenses needs to be subtracted here. Clear? Those are business expenses which are allowed to be deducted from the profit, which have not been deducted shall be deducted here. Okay. Next, we see various non-business incomes which have been credited. So what do you mean by non-business income credited? Means these are incomes which have been taken into consideration while calculating the income, total income or total profits. Clear? So when from this we need to subtract those incomes which are not business related, because we are taxing for the business income. We cannot consider those incomes which are non-business, right? So which have been credited here. For example, if you see in this dividend, this shouldn't have been taken as an income from business, right? So we have to subtract such incomes which are credited, which are not related to our business. Clear? Next, we add those incomes which are not credited. Sometimes what happens is business incomes which are not been credited here, which are not taken into consideration on the credit side of a profit and loss account. These had to be added but haven't been added into the profit and loss account. So what we do is we make that adjustment and we ourselves add it to ascertain the actual net profit relating to the business of that person. Clear? So when we do this, we can get the actual income. Apart from this, we also have certain other adjustments like add the overvaluation of opening stock, add undervaluation of closing stock, and we shall subtract undervaluation of opening stock and subtract overvaluation of closing stock. If these adjustments have to be made, then check for them and make the adjustment accordingly. Seeing there'll be additional information given to you. Based on that, we have to make these adjustment to arrive at a taxable total taxable income from business. So this is what we can tax under the head income from business and profession, under the head in business income from business. Clear? This is the basic understanding. This is not an exact format. I made it simple and just a basic explanation has been given. So it's not an exact format for calculating, but this is the steps. Okay, you can follow these steps to arrive at total taxable income from business. Clear? So now we saw what is to be done when there is a net profit which is there in the profit and loss account given to us, correct? So if net profit is given, this is what we do, right? So this is the procedure for net profit. So what if there is a loss given to us in the sheet, in the profit and loss account? If there was a loss given to us, how do we treat this? This is what we need to know also, right? So what we have to do is, if there was a net loss given to us, clear, if net loss is given to us, then the entire thing will be reversed. That is, whatever items need to be added shall be subtracted, and whatever should be subtracted shall be added. Okay, so if we start with the problem with net loss as per profit and loss account, then we have to subtract the inadmissible expenses and add the admissible expenses and add the non-business incomes. Okay, subtract business incomes and so on and so forth. Same thing, less, and this, add and add. Like this, when you have to do only when there is a net loss given in the question. Clear? It's a basic understanding of the format. So now let us consider an example to see the income from business. Okay, so how do we compute this? Let us understand this with an example. So here we have a profit and loss account given to us of Mr. A. For the assessment, we have to compute taxable income from business for the year assessment year 2019 and 20. Clear? This is the profit and loss account for the year ending 31st March 2019 given to us. Clear? So there are various expenses and various income recorded, and we have the net profit given to us, and there are certain additional information given to us here. Clear? So first we start with our net profit given in the profit and loss account. We record that. See here the solution. So net profit as per our profit and loss account is to be recorded. Next, we need to record various inadmissible expenses. So we need to add these inadmissible expenses. So let us observe the profit and loss account first. To salaries paid. So naturally salary, when it is paid, it can be office related salary, or it can be the salary paid for the business purpose itself. We'll consider that. So that is allowed, so you need not add it back. Clear? Next, office expenses are naturally related to business, so ignore it. To depreciation, usually depreciation, if they give generally, we will consider it to be an admissible expense itself. However, here we need to importantly note one point, that there's an adjustment related to depreciation given to us in the additional information. So again, I repeat myself, if in case only in the profit and loss account they mention depreciation, then we consider it to be an admissible expense and we shall not add it in our admissible expense. Clear? But however, here there is an additional information given to us which states that depreciation allowed as per income tax rule is just rupees 28,000, excluding the depreciation on computers. That is a different part. Just remember this, depreciation allowed as per income tax rule is rupees 28,000. So the maximum amount allowed is just 28,000. So here this 30,000 which has been taken as depreciation includes certain excess amount of depreciation. Any excess depreciation is inadmissible. Clear? Excess depreciation is inadmissible expense. So therefore we can have two kinds of adjustments here. Either you can take this 30,000 minus 28,000, which will give you 2,000, and consider that as an inadmissible expense, and that is it, done. That's the only adjustment to be done here. Or there is second adjustment, which means that you can either consider this total depreciation amount as inadmissible expense, and again this depreciation amount as admissible expense we can minus. Okay, so I am going to follow that method. What I'll do is I will take this depreciation as disallowed depreciation as 30,000, and then after which at the end, when I'm subtracting the admissible expenses, I shall consider this depreciation amount 28,000. Clear? Next, here they say GST. Okay, so GST or custom duty which is paid is to be considered as an admissible expense itself, so it shall not be added to a profit and loss account. However, if this GST or custom duty, if it was paid after the due date, if there was any delay in the payment, then that amount shall have been inadmissible expense and would have been added to our net profit. Clear? Here we won't add it because it is not mentioned whether it is due or whether it is not paid or something like that. So we shall consider to be paid in within time, and this shall not be added to our net profit. So it is treated as an admissible expense which should have been deducted, which has been debited, which has been deducted from our profits. Clear? So next we see legal expenses naturally relating to our business, we can exempt it. So we need not consider it as an inadmissible. Then income tax. So remember this, any kind of a direct tax, maybe advance income tax or wealth tax, etc. Such taxes shall be treated as an inadmissible expense always. Any direct taxes. Clear? Any direct tax shall be an inadmissible expense. However, any expense on calculating this direct tax shall be admissible. But the income tax itself or any direct tax itself shall be a inadmissible expense, so we add it. Clear? Next, there is computer purchase given to us. So computer purchased is an capital expenditure, so it shall be considered in as an expenditure in case of income from capital gains. So relating to that, there's a video separately in my channel, you can go through that. Okay, the link has been given here. Clear? So next, so that expenditure is an inadmissible expenditure. So therefore it's a capital expenditure. We shall take it as an inadmissible expenditure and add it. 24,000 shall be added completely. However, when an capital asset has been purchased, we must remember that we have to calculate depreciation on that. Clear? So that is the reason they mentioned here that this depreciation amount does not include the depreciation on computers. If it was included, then we wouldn't have calculated an extra depreciation here. However, since it says that it's excluding the depreciation on computer, we have to calculate the depreciation on this computer purchased. Clear? That I will be doing when I'm doing the admissible expenses part. Now, donation and charities are also considered as inadmissible expenses, so are to be added. Provision for doubtful debts, or it can be provision for tax or bad debts. Here I've combined these two just to make sure that two entries are combined in one. Clear? So it is basically if they give provision for doubtful debts or if they give provision for bad debts, irrespective of this, any provision shall be considered as an inadmissible expense itself. Clear? Anything, provision for doubtful debts or bad debts, both shall be treated as inadmissible expense. Hence, it is added back to our net profit. Next, these apart from these, we have an additional information. Additional information says salaries paid includes rupees 12,000 paid to the house servants. So when a salary paid rupees 12,000 to the house servant, it is a personal expenditure, right? So this personal expenditure is not a business expenses. That is an inadmissible expense. Any personal expense is inadmissible. Therefore, out of this only, they have made this payment. That is what they're telling. So this shouldn't have been subtracted, but they have subtracted or they have debited. So therefore, we shall add it back to our net profit. Clear? Salaries paid to house servant, rupees 12,000. Next, legal expenses include rupees 1,000 paid to lawyer for fighting a personal case. Again, it is a personal nature, so something related to a personal expenditure. Therefore, it shall not be considered here. They tell in the 16,000, this 1,000 was also included. So we need to separate it. We need to add it back to our net profit. That is what we do. Legal expenses for personal case shall be added back. So when we do all this adjustment, we arrive net 91,000. That is to be added to our net profit. This is the value to be added to our net profit. Clear? Next. After this, we have to subtract various admissible expenses available with us. Okay, so here the first thing that I would be considering is depreciation allowed as per IT rule, that is 28,000. I told you, no, either we could have minused it 30,000 minus 28,000 and directly recorded 2,000, and here that wouldn't have anything, wouldn't have come here, nothing would have come here. Okay, but here what I have done is I've taken 30,000 as depreciation disallowed, and here depreciation allowed as 28,000. Therefore, I record it here as well. So once you add, once you subtract, if you're following this method. Otherwise, directly subtract and take the balancing figure. Clear? Next, we shall calculate the depreciation on this computer purchase, and that we shall record. So according to this act, depreciation is to be calculated at 40% on computer purchase. Clear? There's a depreciation table only. You need to either refer certain textbooks to know that, or you can refer the internet or any other source to know the depreciation rates for the computer. Clear? So depreciation rate for computer purchase is 40%. So 28,000
24,000.
into 40 divided by 100. When you do this, you get the value 9,600. Clear? Next, we have unabsorbed depreciation of rupees 3,000 relating to an earlier year which was not recorded. So it was an admissible expense which had to be subtracted in the earlier years which weren't done. So we can adjust that here. So that's why we record unabsorbed depreciation as 3,000, which is to be recorded. So these were our admissible expenses. No other related information is given. about this admissible expenses, only these were there, so we shall record it. When we take the total, we need to minus this. So net profit plus our inadmissible expenses less our admissible expense. Clear? Next step, less our non-business income. So here if you see, there are various incomes which are not related to our business. For example, if you say here, there is bad debts recovered. Yes, bad debts recovered is a business income itself, but they have told in adjustment that out of the bad debts recovered, 10,000 were allowed as deduction earlier. So earlier certain amount was allowed for deduction. So out of this 30,000, 10,000 were subtracted last time itself, though they were allowed in the previously that they were bad debts recovered. Now this amount, this rupees 10,000 cannot be allowed as deduction. Apart from this, rest you can treat as non-business income. Clear? 10,000 is treated as business income. Apart from that, 20,000 is treated as non-business income. So bad debts recovered which were disallowed earlier shall be subtracted as non-business income 20,000. Clear? Next step, rent from a house property, rupees 19,000. It is to be taken under the head income from house property. So therefore, it shall not be taxed here. So it is a non-business income to be subtracted. Next, dividend also. Naturally, 7,000 is to be subtracted. This is the tax-free income. So you cannot tax it at all. Even if you have to tax it as a, if it was a foreign related business, a dividend also from a foreign company, then that dividend also should be taxed under the head income from other sources. It won't come here. Clear? Next we have commission, brokerage and sundry receipts are considered as business related incomes itself, so therefore they won't be coming here. Okay, those are business incomes. Clear? It is according to the act which says that commission, brokerage and sundry receipts, unless otherwise mentioned, shall be treated as business income itself. Clear? Next, share of income from Hindu undivided family. You know this. This is a tax-free income and therefore it shall also be treated as non-business income here and minus. Okay, it is a tax-free income. So you have to subtract that as well. Clear? So when we do this, we arrive at 53,000. So now our net profit minus 91,000, net profit plus 91,000, that is your inadmissible expenses, subtract the admissible expenses, subtract the non-business incomes, then you arrive at the total taxable income from business, which is 4,32,400, which is different from our net profit. Clear? After making the various adjustment, this is what we arrive at. Clear? Hope you understood. Thank you.
Subscribe for more videos.